What's up, traders? It has been a while. This is Ferris with Trade with Tex, and today, for the first time in a while, we are going to go over the S&P 500, where we're at now, outlook moving forward, all that fun stuff. But I do want to say that the Fed last week created some craziness in the market, so that's the main reason for this video, so you guys can get my updated outlook. And basically, we're going to start with that, price targets, key levels, all that fun stuff, and then we will work our way through the different time frames. So it's going to be a short and sweet video, but we'll start with the daily time frame, and we'll actually zoom out to the weekly, monthly, and work our way in. Now, just to kind of preface this, we obviously were trading futures and options last week on the S&P, but it doesn't matter what you trade regarding the S&P or the NASDAQ. This pretty much applies to all of the different instruments that you could trade, okay? But anyways, let's get the discussion started here. So for the S&P last week, we shot up on some pretty high volume, and whether or not you caught the move, whether or not you banked on the Wednesday announcement, there's still some opportunity moving forward here. And most of it can be simplified to just key levels. So kind of a hectic chart right now, but bear with me because these levels all are pretty important. You can see that we jumped up to the 4790-ish area on Thursday. So this was after the Fed announcement, not Wednesday, but Thursday. And we formed this bigger upper wick, right? That big upper shadow on the S&P. So naturally the expectation is, all right, some sellers are stepping in. Same thing happened again on Friday right before the close, right? This is good because it does add some potential fuel to the fire for a reversal. However, and I want to make sure that this is the main takeaway here, this is still technically a bullish chart. We're still not that far off from a reversal because any decent sized pullback from the S&P, and I'll show you the exact key level you got to look at in a second, any decent sized pullback here early in the week, Monday or Wednesday, specifically those are the days that we should be looking at for any type of pullback. With regarding these key levels, if we drop below the 4750s, that's perfect because we don't really have a whole lot of support here. That can take us down to 4720, specifically this moving average right there. You can see I tried to draw a line on it and failed miserably. 4726, that's the 8 EMA. And then we have the 4700 level, which is well below that. And all of that comes into play below, let me zoom in to the hourly time frame, below this guy right here. This 4756, I'm so not used to saying 4700s, 4756, 58 zone, that right there is a key level from the past couple of days. And short term, it's very important for the current price structure. So as long as that holds up, the expectation is that we keep testing the upside. And you could see in the afternoon, we came very close to losing that / testing it again on some high volume on Friday, but they defended it, right? We rallied. And what that puts into play is another test of resistance overhead, which currently we have these levels. So this was a support I just highlighted right here. This is a zone technically. And then we have a smaller level here, 79, which is very close. 89.5 is restricting us from this bigger sell-off from before on Thursday. A lot of volume behind that sell-off. That's why I was saying that there's a chance at a pull here. And then overhead, the live targets that are remaining are these 99, and you can barely not see it. It's 48.10 above that. Okay, 48.10, and then like 48.22, 25. Okay. So currently, and why I told you guys we're going to start with this time frame, this gives you an idea of what to expect moving forward, right? If we get strength above this zone, next leg up for 10 points, 10 points, 15 points, right? That's 10 plus 10 plus 15. And then any weakness below this, there is really just a vacuum that's waiting below. Vacuum, magnet, whatever you want to call it. If you're in the Trade with Tex chat, we call it a nice shoop because that's the noise that those magnets make. But that would take us for a shoop right back down to 4726, 4700. And that's my favorite scenario. However, and this is the flip side, what we were just talking about, this chart is still technically intact because we have higher lows, we have higher highs, and higher closing prices. And you can see it a lot better on the daily time frame, right? Anybody with two eyes can see it. The only reason I'm throwing out the potential for reversal is because we are overextended with a couple of bigger wicks here. My expectation is that they still keep this floating up, but I would love to see the high volume pull below the 4750s. That would be the cherry on top after last week's movement. Okay, and I was going to show you guys this on the monthly. So these are the different time frames that we're going to go over here: monthly, weekly, 2-day, daily. Just work down on some of the bigger ones real fast. The monthly, super simple, right? We rotated up, meaning we broke the prior candle's high. And you see these green lines up here? Those green lines, those are the ones that are coming from last month's fibs. So if you use Fibonacci levels, you can see that these green lines right here, 47.52, which was a big target for the Fed announcement after it broke out. Initially, I did not play the breakout, but this was the big level that we were looking for afterwards. So 47.52, 47.99, these are the two green fib extensions on the chart. So they're monthly targets, basically. We're halfway through the month already, more than that if you count off the Christmas day off there. But basically on the monthly, we are breaking up. We've already hit the first fib, which means it has already delivered some kind of gain. The remaining two fibs are just remaining targets if it holds above 47.52. Again, you can see the importance of this staying above the 47.50s. Okay. Now the weekly, pretty much the same thing. There's not much variance here between the different time frames. The weekly only kind of reaffirms what we were just talking about of this being overextended and having some downside, but currently not signaling that. Okay, not without a loss of support. The only other thing I wanted to point out on the weekly here is that if you use Bollinger Bands or some variation of them, the weekly upper Bollinger Band, usually if we're hitting that, or lower for that matter, it doesn't matter. This is the upper in red, I'll outline it in white. That acts as a magnet. So, for example, if we drift too far away, like if we keep moving up and we just drift too far away from this 47.67, then that's going to be a magnet. So one of the scenarios to keep in mind for this week, let's say that things go as usual, we keep moving up. That 47.67, it's going to move up slightly, that number, but that's going to be a magnet for any type of intraday pullback. So me being a day trader, this is something that I factor into my day trading when we start seeing pullback setups intraday. Okay, or if we're shorting pops or anything like that. Okay, now last time frame, because we already technically went over the daily, but the 2-day, super important here, and I think this is just a good way of viewing the chart in general, to shuffle between the 2-day, 3 and 4-day. But the 2-day you can see has been in melt up mode for a while, ever since the last Fed announcement, which was, what was it, November, I think. And we crossed over right here, moving averages crossed as well just after, so crossed above the 20 SMA, 20 EMA, whatever you use. That's a buy signal, followed through, and you can see this recent move is coming off the 8 EMA. Again, we are overextended, and what a lot of people like to throw out there is, oh, we're overextended, we're going to dump back down. But see how this normally plays out, where we consolidate? So the big thing that the 2-day is telling us is that, yes, we are overextended, but it's the same thing that we were talking about in the chat room early to mid-November, is that the chart is still technically intact to the upside. If we want to get a reversal, we need one of two things bare minimum. Big volume increase, which usually holiday season, this is kind of unlikely, but we had some volume last week, so it's possible. Or time, right? See how we have these candles on the daily time frame where they're starting to show some bigger sell pressure, right? Even if we carve out some highs without really forming a strong candle into the mid 4900s, this has the possibility for a bigger pull. Okay, so personally, I still think the month of December is going to be a green one, a bullish one in general. However, getting closer to the end of the month, and that's only a week, 2 weeks tops, we have to be very careful staying long. We have to make sure that we're taking profits and staying open-minded to the downside below the key levels, which in this case, 47.50s. Okay, So that kind of sums it up. I know it's overkill analysis right there, but I want to make sure that I'm covering all the bases. And obviously, if you don't trade futures or options all that well, feel free to join us in chat. We got a free week. All you got to do is sign up before the end of the day on Sunday. Okay. But S&P currently bullish, hanging on by a thread, but bullish. And my only other little form of, not advice, but just a suggestion, if you are playing individual stocks, try to play stuff that isn't super overextended. Easiest way to read that is either the RSI on the 2-day or the weekly. So not the daily RSI, screw the daily RSI, 2-day or weekly, or make sure that the stock is not too far off of last month's high. Okay, like for example, one of the names that's getting very popular right now, we've been playing it the last couple of days long, Tesla. See the monthly candle here? How it's not too far off of last month's high. So the risk to reward isn't total crap in relation to the other stocks that are in play. This is something that you should be looking to play, even if it is only a temporary long. Okay. But anyways, I'll leave it at that. Again, tradewithtex.com if you have any follow-up questions, or the comment section below. And if you like the video, like and subscribe. All right, it's good to be back to YouTube. Keep an eye out for more videos moving forward, guys. Have a good Sunday night.